So in all of the previous examples, we're assuming that when the firm is acquiring an asset, it is paying out cash. However, in some of the situations, the firm may not pay out cash, and it is called non-cash acquisition. So what are examples of those situations? For example, sometimes firm may defer payment. So instead of paying now, the firm may pay in the future. Or in some other situations, instead of paying cash or deferred payment, the firm may issue equity security in exchange for those assets. So the issuance of equity securities. And then going in some other situations, the firm may basically receive the asset as a donation. So what journal entries do we make under those situations? And the general rule here is in any of the non-cash transaction, the components are recorded at their fair value. So this is the general rule here. And you may ask, what kind of fair value? So is it the fair value of the asset received, or is it the fair value of the whatever the firm is giving? And then the rule here is we first look at the fair value of the asset given. So for example, if the firm is issuing equity securities, we look at the fair value of those equity securities first. And then, so or in some situations, the fair value of the asset given is not clearly evident. And in that situation, we move to the second indicator, which is the fair value of the asset received. So here it's just we first look at the fair value of the asset given and then the fair value of the asset received. Deferred payment. So let's look at each of those situations in turn. The first situation is deferred payment. Instead of paying now, the firm may give the seller a note, which is telling the seller, instead of paying you now, I'm going to pay you in the future. So here is an example. Firm B bought a machine on January 2nd. In payment, firm B signed a non-interest bearing note requiring $50,000 to be paid on December 31st. The effective interest rate is 10%. What is your journal entry? Please spend 1 minute. First, try to, I know you may not know how to write the journal entry, but just first try to imagine a journal entry by yourself. Try to write that journal entry out, whatever you imagined, and then you can pause your video for now. So the journal entry here is to debit machine 41,323, to credit note payable, which is the face value 50,000. And then because the note is issued, it is the effective interest rate is 10%. So it is kind of issued at we have a discount on note payable. And the discount is 8,677. So how do we get to this machine 41,323? As we just said that the cost that can be capitalized into the machine, we first use the fair value of the asset given. So what is the fair value of this non-interest bearing note so this date is January 2nd, 2016. The fair value is, we need to discount it to the current, it is to be paid on December 31st. So we need to discount it to January 2nd, 50,000, and there's no cash interest here. So we discount it by using the 10% discount rate, and it is for 2 years, from January 2nd, 2016 until December 31st, 2017. Those are 2 years. And then that will give you the fair value of this note, which is 41,323. And then this note is recorded at the face value minus the discount on note payable. Fair value 50,000, discount on note payable 8,677. So this is the situation of deferred payment. And then issuance of equity securities. Company B issued 10,000 shares in exchange for land. On the date of the transaction, the market price of B's common stock was 20 per share. What is your journal entry? Please pause your video for now and please spend 1 minute. Try to work on it on your own. So your journal entry here is to debit land 20,000, credit common stock. Oh, sorry. So this is 200,000. So how do we get so this 200,000 is the capitalized cost of the land. How do we determine how much cost to capitalize into this land? We use the fair value of the asset given, which is the equity security given. And the fair value of the equity security is 10,000 shares at $20 per share. So that is 200,000. The third situation, donated asset. Company B decided to relocate to city of M. City M agreed to pay the full 20 million cost of building a new office building for B in the city. So firm B in this situation, it is just receiving this building for free. This is a donation. What is your journal entry? Please spend 1 minute, try to write out this journal entry on your own first. So here, we debit building. We already know the cost of building the building is 20 million. And then the question is, what do we credit? The firm B didn't give out anything. So what do we credit here? So in this situation, if it is received as a donation, the firm needs to credit revenue, donation of asset here. So this is the donated asset. And this is the non-cash. We have talked about all three situations of the non-cash acquisition.